All right, so I don't see too many any real new people here, but that's okay. That's good. Either way is fine. All right, good. Well, good to see everybody. So let's run through the markets here. And again, if you are somewhat new, we do go over a very specific strategy all around identifying, supply and demand in the market, meaning identifying price levels in any and all markets where supply and demand is out of balance. Why? Because that's where prices turn in markets. And again, the whole goal of this, whether you're trading futures, forex, what have you, stocks, anything, the whole question is where are prices going to turn and where are prices going to go? So if you back up on that question, prices turn at levels where supply and demand is out of balance. Right? And so once you can identify, those levels, that if you have the ability to identify supply and demand levels in a market where prices turn, that also means you have the ability to identify where there is not supply and significant supply and demand in a market, and that's the area that prices move through fairly quickly. So that answers the question of where are prices going to turn and where are they going to go. So let's get started and just do that. I have a whole list of markets here that you can see on the screen. If having said that, if you have a market that you want to look at, that I'm happy to pull it up. Otherwise, I'll just go through my list and we'll spend the session doing that. Crude oil is great, and we're actually looking at crude oil. So why don't we start there then? And sure, we can look at the yen after that. So those are all on my list anyway. So again, just type your symbol in there, and we'll look at those first. Okay. So if we pull up the daily chart of crude oil, these are levels that we've had in all of our many of our prior FX Street sessions. I haven't changed these two levels on the chart at all, and all we keep doing is hitting this supply zone, just touching it and falling. And there's nothing to suggest that we shouldn't continue to fall, but we do have two new levels to deal with here. So if I blow this chart up again, the levels you see here are nothing new. We had these the last couple, a few times we were in session together. But some new levels that we have are, especially one, and we're not close to it, so I'm not going to spend much time on it here. But let's just get it in there so you can have it on your chart for for next time. In case we do get quite a rally. Now we would need a really big rally in crude oil. I don't know that we see that happening anytime soon, but if we do get it and get up to this level, that would be another selling opportunity, and this one would very likely take us down to the 35 mark. So that's a longer term trade that I know I would be very interested in. Those are the type of trades I really like to take here. That's the bigger picture view of crude oil. Now, if we go to some smaller time frames, there are plenty of other opportunities to look at as well. Okay. If I go down to a 60-minute chart here, we see we're running into some, the market's going to, run into some trouble up here. But let me go down one more time frame so we can look inside that. Okay, this area here. So price has already started to slow down, if not started to turn up here. And some of you may look at these pivot highs here as supply zones. Those are not fresh supply zones, so those would not qualify as supply zones for us. Especially the other reason why we'd be very careful with that is we have a number of demand zones sitting just below current price. Right? We've got one here at 44 and a quarter, and then another one down here at 43.75. So in the short term, the chart is suggesting it's better to be a buyer on a pullback to a demand zone for a move up here than it is to sell short at any of these pivot highs. Right. Good question there on OPEC. Question is, does the crude analysis we're doing here consider the coming events on OPEC? So what I'm going to say now, I've felt strongly for years, and that's just because of OPEC meetings and looking at charts. At this point, I would have said this years ago, I completely ignore the OPEC meetings. I completely ignore the inventory reports. For those of you that have been with us for for years now in these sessions, you see in the big picture, we pretty much always get crude oil and these gold and these other markets right as far as big picture direction. And the more that you add, OPEC meeting information and inventory reports and all that stuff, that tends to get you to take the opposite, direction that you should. So just be very careful with that. In other words, when news comes out of OPEC that suggests they're going to produce less, which means less supply, price should go up, more demand. Almost always the opposite happens. Okay, so that can, why is that? Well, are they actually doing what they say they're doing out of those OPEC meetings? Most of the time, the answer is no. And whether they are or are not, the big thing with, for example, crude oil, like any of these other markets, but especially crude, where's the one place where you can analyze the entire market's real, keyword there, real supply and demand? Right? Where's the one place where no one can lie, no one can cheat? Where's the one place where you can see the market's real supply and demand? It's the price chart. Right, yeah, the pivot highs are not fresh supply and demand levels. Anyway, so again, I don't want to, let's see, I'm just reading back here. Yeah, remember pivot highs are not fresh supply and demand levels, so you don't want to be careful risking money at those levels. But instead, the chart is suggesting that after a pullback, prices go a little bit higher. But let's go down a time frame. We've covered this crude in the big picture. Let's look for some, some of you I know are active traders, so let's take a look. If I go to, let's go to a 10-minute chart. We want to look left here. There we go. All right. Yeah, so it's not really until you get above, until above 47 where we've got some really strong levels in there. There's some other levels that for example this 45 can work for a little pullback. When I'm giving, and the reason I say that, when I'm giving you supply and demand zones, also what's equally important there is what's equally important is you need to know where the demand side is too. Okay, so you may have a perfect supply zone, a perfect demand zone, but if they're too close to each other, that's not a trade we want to take. Okay, so when we say the when I talk about the 45 area up here, this little supply zone. Yeah, the thing I like about it also is you really don't have any demand until you get down to about $1 lower, about 44.40. So finding your supply demand zones is one thing, but that certainly does not equal a trading opportunity. What equals a trading opportunity is fresh supply and demand zones that are far apart from each other. Okay. All right, so I think we've probably spent enough time on crude. That is larger time frame, smaller time frame. Let's go up to the dollar yen. We'll start with the spot market. Sure, and then we'll go to gold. Yen has some great stuff in it here, so I was looking at this morning. When we focus on the 4-hour chart, you can see it's struggling here as it should. In fact, I'd expect it to turn lower, maybe even come down to 107. So you might be actually in an entry zone right now. If you're willing to risk to 109, I'd say 109.30. From current price. In other words, pushing the sell button now, risking to 109.30. Let's just check the smaller time frames here before we make this official. You'd have a target of about 108.40. So not a huge initial profit zone, but a decent one. So in the short term, we'd expect prices to turn lower from where they're at now and move down to about 108.30. Okay? That's what we have in the yen. In the bigger picture, again, let's pull up the 4-hour chart here and scrunch it. You do have some fresh demand zones. You're looking more a range of 106.50 to just above 112. That's kind of the bigger picture yen. So great opportunities there, and that's your kind of, again, real quick, just big picture, small picture outlook, if that makes sense. And as we go along, maybe the next one will slow down and actually put these, the lines on the chart and all that. A method to trade exotic pairs, it's all still going to, the strategy is ultimately going to be the same. It's still the same, supply-demand strategy. Nothing changes there. So I wouldn't have anything really different to say. The only thing I would add is if you're going to get to, as you say, exotic pairs, typically you're going to see less volume, bigger spreads. I would just strongly suggest not actively trading those markets, but putting on positions and holding on to them. Okay. So there's the symbol that you're talking about. Okay. Let's pull up. We'll get some bad data in here, just a, this is what happens when you're looking at a really thin market. All right, let's. So again, the supply demand zones are the same. Here, you're just continuing to buy pullbacks to demand zones until you get a fresh supply zone above current price. Right? Let's go down to gold, and let's see what we have here. How many people here trade gold? Who trades gold with us? And when you do, I'm assuming you're trading the futures. Okay, good. Great. Yeah, great market to trade. All right. So, where are we here? Yeah, so gold, we've got some great moves in this one. The lines I just took off, I know, the buy here, up to the supply here. Now we're moving down to this pivot low, but we're going to have to go to a smaller time frame to find demand. This has been, for me anyway, the number one most amazing chart over the past couple weeks here. It's just been phenomenal as far as opportunity. All right, we could get a little bounce out of where we're at now. We're actually getting that. We're hitting some demand. But the upcoming trade is at this level right here. And you just have to be careful with it, though, because this is drop-based drop. So we want be better if prices got out here to the 112.80 area. But that's okay. On the downside, we have, let's just move left. Okay. We have a nice target area of 111.43, and then a nice little drop-based rally, 111.16, sitting below that. 112.10. Let me look at that. The 112.10 you're suggesting here. There's 112.10. So you're talking these pivot lows here. If that's the level you're talking about, I would just be careful with that because remember each time none of that is fresh territory, right? Meaning all these pivot lows there that you see on the chart, what's happening is price is coming down, meaning buy orders that are down at 112 at 1210 are being filled, right? Which suggests that the demand in that area is weakening or decreasing. That's why we want to stick to truly fresh levels. Okay. No, I know that, but I'm saying price has been there a number of times, so we'd expect it the next time down to really go through that level. Okay. As far as any short-term areas in gold, we usually have that, so let's take a look. I know a lot of people day trade gold, which is totally fine, and a lot of the reason for that is because it's a high price point market. You're actually into a level right now, so let's see if there's room here. Let me just go down to. No, this looks fine actually. Okay. Yeah. So if we pop up there again, which we could any second, there's room for prices to fall. I would say back down closer to the 120 area. But again, this is not a fresh level anymore, so the odds of it working have decreased. Right? You'd really need your stop above the level. So notice how this is a good lesson. See how we got all the way this deep into the level? That just tells you it's not. There's probably not a ton of supply in there. Having said that, again, if you're willing to risk really about 2.5 points, so that's about $250. Prices come back down to 120 or 1220. Okay. I'm going to hold out for the bigger level up there, the higher odds level. But again, I wouldn't be surprised if you got down to 1220 before trading 1226.50. So that would be the bet. Yes, absolutely. That's why we keep saying. I see your question there. That's why we keep saying fresh. That's the key. When you trade fresh levels, the odds are very high that you will, that prices will turn. When you start getting, when you start trading levels that are not fresh, or what I see most of the time is people think they're trading fresh supply and demand levels, but they don't even understand what they are. Yeah, then your odds go down quite a bit. Okay. All right, let's take a look at the Aussie dollar. Here's that daily chart that we've looked at so many times here. So we're well off that big supply zone now, but where do we go from here? So we look at the 4-hour. Let me scrunch this up a little bit, and I think you'll see that the chart is suggesting there's more downside room here. In fact, when we get up to the 76 even area, the next likely move is down. And what we're playing for in the Aussie dollar is a move down through 73 even. Okay. Okay. That's the Aussie dollar. Again, if you have any other markets you want to look at, let me know. Otherwise, I've got a nice list here. And but you know what? Let's go through. Let's go up through the spot markets. We hardly do that here. We need to do more of that. Pound dollar has an opportunity here. Let's see. Oh, no, not the pound. I'm sorry. Um, what I really wanted to go over with you. Let's look at the dollar Canadian. Oh yeah, the euro. No, we'll definitely look at the euro next. There's an old level in there. Let's get rid of that. So the Canadian's been creeping up, and it's taken a while, but now you're getting dangerously close to some really nice larger time frame supply zones in this market. Okay, and there's really you're hitting one here. You're just coming out of that, so let's see. See if it's too late. If it is, there's a nice level sitting just above. Okay, and there's a couple of them. So one is fresh, one is not fresh. Let's put them in. There we go. So yeah, you're a little ways off that. Again, we're looking at the daily chart. But what's nice here is look at the big profit zone on the downside. There's really nothing in here. Okay? There's really nothing down here, at least on the larger time frames. You'll find stuff on the smaller time frames, but not enough to make much of a difference. All right, so now let's go to the smaller time frames and see what we have in here. So that's your outlook on the daily. So we'd want to look for small time frame sell setups, which we have. Have one right here. Okay, I am the last person to suggest day trading or active trading the spot forex market. But if you have so I'm going to put this in for those that want to. But again, I would strongly suggest that you do this in the currency futures, the forex futures versus the spot market. But so there's a nice level above, and again, your stop is going to be above the level, not at the level. Here we go. So there we go. Right here, I would put my stop about 10 pips above the level, and we'd be looking for a move back down to the lows that you see here, just below the 134.70. Okay, right down in that area. Yeah, the good question here, why futures and not spot? I'm just talking for active trading. There's a few reasons, meaning like, and I'm sure most of you heard this before, but the futures are much more regulated. They've got you're trading through a central exchange. It's not like there's your broker's not making a market for you. Levels will you're not dealing with again spreads created by banks and brokers and things like that. So you'll find the same level in a spot forex market on a little 2 or 5 minute chart or what have you. In that same level on the futures, in the futures market, if the area works, sometimes in the spot market you might go through the level a little bit because of the spread and different markets that the brokers are making for you, where it'll hold just fine in the futures. Okay. Remember the spot forex and forex futures. In the forex futures, you're trading through a central exchange, an electronic order matching system. So it's very different, and the playing field is definitely much more level there, if that makes sense. But again, I just want to clarify that's for short-term trading. If you're longer-term trading the forex market and holding on to positions for a little bit, a few days to a week or so, no problem. Spot forex is probably fine for that. All right, so I think we're clear on the Canadian dollar. Long term, We found some supply levels to short against and small time frame as well. All right, let's go over to the euro. There we go. So let me get rid of these. That was a great level from the past, but that's in the past. So I know it sounds crazy, by the way, but if you guys remember a few months back, I showed you a level on the monthly chart in the euro. And here it is, way down right at about even. And I know it sounds crazy, but I would not be surprised if the euro goes there. And if we get a rally back up to here, you could see a move down to that even mark from there. So keep that in the back of your mind. Now that's a crazy long-term level and area, but when you look above on the weekly chart here, you look above on the daily, you just have supply zone after supply zone, and when you try to find demand, it's just very difficult to find any. And we've been saying this for well over a year now, and the market just continues to fall, right? So for a little bit more on the active side, we do have a nice level sitting just above current price, right up here. So that's 107.70. And you'd want your stop, about 80. Right, so there's the level down there. And then your target would be back, at least your initial target would be back down to the lows. So again, if you want to hold on to that position, the chart is telling us the market could go a ton lower. So this is a nice little level to get that type of position started, if that makes sense. Okay. So let me put this chart back. All right, next market. Yeah, I think good question there. Are there any patterns for price movement between supply and demand levels? Well, all you're doing is trading level to level. That's what the trade is, right? So that's why it's key to first learn to identify what a fresh supply demand zone is, and then just then find the opportunities in the charts. Scan through your markets to find markets where you have supply and demand levels, fresh supply demand levels that are far apart from each other. Because in between those levels, price just moves. That's where the trends are, right? But to get in the trend at the beginning and get out of the trend at the end, you need to know where the supply demand zones are. Let's keep going. While we're on the euro, just a quick peek over at the euro yen. The reason I wanted to bring this market up, sure, we can look at copper. The reason I wanted to bring this market up is because you have two nice demand zones here sitting below current price that look really good. Okay, you have 2 or 3 decent demand zones sitting right below current price. I'm on a 4-hour chart. Then when you look above, this is not supply. We would never call any of this stuff over here supply. Okay. Another way to say that is that we have the picture that represents unfilled buy orders. In other words, banks are buying just below current price. And sitting above current price, we have the picture that suggests filled orders. So the picture that suggests likely unfilled orders below current price, and above current price, the picture that suggests filled orders. Does everybody understand that? And when you have filled orders, prices move quickly through those areas. Unfilled orders turn price. Filled orders obviously cause price to move. Okay? Everybody everybody understand that? Oops. All right. Okay, I saw a couple of requests for the S&P. We can certainly go to the S&P. The S&P don't have much change here other than what we've been going over, but we have we have supply up here. All right, there's a supply up here, and we haven't gone through it yet. And that upper level we just touched before and fell. So, and yes, even though we have been to this supply level and gone pretty deep into it, and the one sitting just above that I don't even have marked, the reality is we're not through it. And look at look at below. This is the election drop, right? Look at what's sitting below. Absolutely nothing. So that's a big deal. All right. So huge profit zone below. Interest rates keep ticking up. Obviously, the market participants are looking at the whole, U.S. election, at least so far as you're going to see global growth and jobs, and everything's going to be great. So, that's what the charts are suggesting because of the election. But we'll see. The other side of that is, it's been a week now. Why hasn't the S&P gone higher? And the longer you stay up here without going higher, remember, more and more buy orders are being filled. Every time you have a trade, there's a buy order there being filled. Just like every time that you have that trade, a sell order is being filled. But why are prices not moving higher? So that's something I'm really watching closely. And again, where that comes back to is there's really nothing below. Okay? Everybody see that? Yeah, there's the risk is growing and growing that you're going to see a drop in the stock market here. Okay. Let's keep going. Well, let's look at a small time frame. I don't think you're going to find anything on a small time frame. You know what? I shouldn't say that. If you look up at the 10-minute chart here, we do have a little level sitting at 2170. It's very low risk. Your stop would be, if you can have a stop at 73, shorting at 70 with a stop at 73, shorting at this level, putting your stop above this pivot high here at 73 for a move down to safely, I'd say 58. Okay, so risking 3 to make about 12. Does that make sense? So again, just make sure you're okay with the risk. Remember, the S&P is $50 a point. And there you go. Yeah, the problem with the S&P is the demand. There really isn't anything of any kind of quality, close to current price, right? Even when you look here, the closest thing we're looking at is 64, but that's way below where we're at now. That's 2064, right? So I would not, if I were long the stock market right now, I'd be getting pretty nervous. Does that make sense? All right, is there another market someone wants to look at? Again, I've got my list here and tons of markets to go through, but if you have a market you want to look at, I'm happy to pull it up. Oh, copper. Yeah, you said that. I'm sorry. Let's pull up copper. And yeah, copper's a great market. Let's take a quick peek at the dollar, though, just to see what the dollar's coming into, as that will relate to, that's related to basically every market we've just looked at here. So there's that pivot high, another pivot high, and I need more data. So let's get some more data. Oh, I didn't do that right, sorry. There we go. All right, let's get some data here. Now let's go back. Wow, still need data. All right, we'll try to come back to that later. Let's just find our levels in the in copper. What I really like about copper, if you look at, for example, we've just had this big rally. You clearly hit the supply and started to fall, and we still have a decent profit zone below. But if we break that down and kind of look at this X-ray snapshot on the small time frame, the nearest area of demand is right around 23, right in there, 23.65. But we do have a nice little level of supply, which is the origin of a breakout to the downside at looks like about 253. 253, and then like I said, about 236 on the downside. So you'd be playing from right in here to right down here. Okay. And this rally in copper, it stalled out, and now you have supply zones above. So what gets a little exciting about this is, again, because we're finding smaller time frame supply zones after the market's rallied and after the market has hit larger time frame supply. Okay. Does that make sense? 267. Let's see. Oh, the pivot high up here? Yeah, no, we wouldn't call that supply. That doesn't qualify as a supply zone. Oh, let me look at I'm sorry. You're talking about this base. Yeah. Yeah, I was talking about the pivot high, but the base, sure. That looks really good. That works if we get up there. We're going to have to get through all this first, and that's not likely. So, but I like the level if it gets there. Sure, it qualifies. And yeah, sure. Let's take a quick look at the FESX. I think that's what you're referring to. So here's that same level. Remember the what is in the S&P 2170 or whatever, but here's that same level in the FESX. So that would be 53 all the way up to 58. You need your stop at about 61, 62, I would say. And then that would be for a move at least back down to, yeah, there's big move. So great risk reward there. So not great on the odd side, but fantastic on the risk reward side. Okay. And yeah, that one looks good. So you're risking about 9 points. Is that correct? Let me just double check. 53. Yeah, so you're risking about 9 points to make a lot more than that. All right, you don't even need all the way to, you could do 61. So 53 to 61. So you're risking 8 points to make, again, plenty. You'll just see where that pivot or that that low is, that pivot low, back down to the lows. Because there's no fresh demand before that. Okay. And, that's really what we're looking for is just those. Again, this all comes down to fresh levels and big profit zones, period. Once you can train your eyes to see that, you're able to answer the question in any market, where is price going to turn and where is price going to go with a very high degree of accuracy. Does that make sense? So we've covered a number of markets. Hopefully that was helpful. There's my email address, sseiden@tradingacademy.com. I know it's been about a month since we got together. So if you're struggling or have any challenges at all, just email me. I'm happy to get back to you and help where I can. And we'll see you soon. I think we have another one scheduled, and we'll focus on going over a lot more markets. And I'll come into the next one with some stuff really baked. All right, have a great time, everybody. Until we see you next time.